Good morning. Today is Monday, May 22nd. The time right now in Singapore is 10 minutes to noon. And let's do a bit of recap as to what happened last Friday. On Wall Street, we see prices of equity market started to recover. And of course, it closes on a weaker note. But by and large, you can see that the market is very, very positive looking. And this has got a lot to do with the outlook for the debt ceiling negotiation between the White House and the Republican Party, in essence, the House of Representatives. So we know that up to the weekend, there was no progress being made. In fact, there were twice in which on Friday when they met, Republican Party actually walked out of the negotiation table. And now that President Biden is back in Washington after attending the G7 meeting, the negotiation is going to start afresh. We have very little time now. From now until the X date, so-called June the 1st, we have just slightly over a week time, and time is of the essence. Market is getting very jittery, but by and large, market is very positive, expecting a breakthrough in the lifting of the debt ceiling. So market has been buying up basically. So that momentum can actually see prices continue to move higher, even before the result is known. So basically what market is expecting, the market if can actually pull back a little bit to 33,253 to 33,330 in the Dow Jones, that could actually be a base in which a market can propel higher to challenge the month high, which is currently at 34,257.8, which is slightly below the year high at 34,342.3. So by and large, these two levels may act as a very hard cap for prices to consider whether they can actually break through. But by and large, this is going to be the target if there's going to be an extended rally from where we are today. Okay, in the S&P 500, the S&P 500 actually broke out into a new high for the year to 4,312.8, as you can see here, before a slight pullback as to the profit taking that we have seen just before the market closes on Friday. So by and large, the market is very, very close to my target area of 4,240 to 4,342. So this area may actually be an area of danger for those who are still holding long positions, because I believe that this area may actually be quite attractive to take profit for those who have already gone long. Okay, so in the Nasdaq, we continue to see market continue to edge higher, making another marginal new high for the year at 13,844.8 thereabout, and this level is definitely within touching distance of my target range of 14,135 to 14,712. So again, market is getting very, very close to my target area, and the fact that we are almost at the month end, if the prices manage to go into this bracket of prices and did not break through, then it is laying the groundwork for a reversal. So do watch out in the face of the uncertainty surrounding the debt ceiling negotiation, and of course the still lingering banking crisis. Holding long is getting to be a little bit hairy for me. So I'm just going to watch this market and see if I can get a more definitive selling signal before I take up a position. Over in Asia, we can see that Hong Kong managed to recover from last Friday low. Last Friday, we can see that the market actually closed below the April low for the first time this month. And now it has gone back up again, challenging the 20,000 levels. Right now, it's trading at 19,710. So will this be enough for the market to form a base to go higher? I would say the upside potential is actually quite limited. First, the barrier to higher prices between 8,322, and then the lower end here is also quite limited. Target is probably around 19,000. So upside, very little opportunity, downside also very little opportunity. So if you can afford to avoid this market, by all means do so. Okay, over the Nikkei, we can see that last Friday Nikkei actually registered a new high, not only against last year, it is the highest since 1990. So we are seeing a 30-odd years high, and this is on the back of a surprisingly good set of numbers for the GDP on the first quarter. Market did not expect such a stellar performance, but what the number released was double what the market expected. So, and that explains why the Nikkei is at such elevated prices. But again, we are beginning to see, at least for me, my target is going to be about 31,600 thereabout. So giving me very little reason to go long. In fact, I'm actually holding on to short position, which is not working out very well for me right now, but I have very, very light position, and I am more than happy to actually scale up my sell position if I do get a confirmative reversal pattern, because I think this market is seriously overvalued relative to its fundamentals. Okay, over in the mainland equity markets, we can see the CSI 300 following Hong Kong rebound, it's also managed to hold on to its gain, and we saw that the market actually tested last month's low, which is at 3,925.5. It breached marginally before it recovers. On a closing basis, this market has not taken out the April low, so that could be the basis in which the market can build a base. So we'll see whether that is going to be the case. Over in energy market, we can see the the WTI crude oil actually managed a marginal high for the week at $73.53 before losing ground a little bit. So if this is going to be a technical pullback, I would think that somewhere between $67.50 to $69.10, that level could be very conducive for buying. Let's see what happens, because I think the potential is for a test of the May high, which is at $76.07, with the possibility that it may even extend higher to $83.50. Over in gold market, we saw that the gold actually saw a robust recovery on Friday. The low traded last week was on Thursday at 1,952, which is very, very close to my original target at $1,950. And this Friday's rally, last Friday's rally was actually very conducive for the case that the gold market may have hit a bottom for now. And if that's the case, any pullback to, let's say, $1,978 to $1,972, that could be an area of opportunity to start laying buy positions for an eventual challenge of the all-time high at $2,081. Silver is also exhibiting the same firmness. We saw last Friday, we also have a rally in the silver market. So if the market can come back and test the last month's low, which is currently at $23.57, that could be the basis in which the market can go even higher. Let's see whether that's going to be the case. Okay, over in dollar, the dollar has actually done very well, beyond my expectation. Originally, I was still bearish on dollar, but now looks at the market that wants to go up. Market went up to as high as 103.49 last week, and which is on Friday, and since then it has pulled back a little bit. So if this pullback sees prices back into 102.36 to 102.80 levels, that could be an area to actually buy, because I think the market is getting ready to go even higher. Okay, and if this is the case for dollar, that means all other currencies should come down. But right now we are seeing a rebound in all these principal currency here. Euro dollar had hit a low of just under 107.60, and now it's rebounding. And if this rebound can actually extend a little bit into 109 levels, that would be a great level to consider taking up short position. Same thing for sterling. Sterling also hit a low of 120, just under 124, and then now it's beginning to rebound. And if this extension can extend a little bit higher to 125.35 to 125.70, that area is actually conducive for selling. And in the Aussie market, similarly, market actually hit the 66 cents and then rebound. And if market can extend a little bit higher to 67 cents and marginally above, ideally into the bracket between 0.6712 to 0.6737, the area is a selling opportunity. Well, dollar CAD is a little bit different. Now, while the dollar is doing relatively well, rebounding, but we can see that the price action in dollar CAD is a little bit different from all the other currency pair, purely because crude oil seems to be coming back again. So if crude oil remains elevated, that means it is supportive for a stronger Canadian dollars. That means the dollar Canadian's upside is quite potentially limited. But however, if the market can actually extend a little bit to 135.70 to 136, I think that will be a great area to position short, because if the Canadian dollars is strong, because crude oil prices is strong, then it can actually saw dollar CAD actually unraveling to challenge the 133 levels. Over in dollar yen, this one will also outperform beyond my expectation. Originally, I was holding on to a bearish view. Now, in view of the market rallying to 138.75, I have turned positive, because the dollar index is also positive right now. So if we can see a pullback to, let's say, 136.20 to 136.80 levels, that could be a conducive for buying. The market may actually go a bit higher to go into 140 to 142 level. So the potential is actually quite good here. Okay. Over in Bitcoin, we can see Bitcoin has lost some ground over the weekend. On Sunday, we saw prices was actually hovering above 27,000. At one stage, was 27,000, almost $300. And then this morning, we saw the market unravel back to test the lower end of 26,000. The low traded so far is 26,547, and this area is actually a buying zone. If the market can stabilize here, that could be the basis in which it's going to propel Bitcoin higher. I think technically the market is getting ready to rally in the face of the uncertainty surrounding the US debt ceiling negotiation and the ongoing banking crisis. That leads to a lot of people having a very positive outlook on cryptocurrencies as a whole. So this could be the catalyst that may see cryptocurrencies rallying. As far as Bitcoin is concerned, a retest of 30,000 is not impossible. So this is my 2 cents worth. Hope you enjoy my analysis here, and I wish you guys happy trading today, and I'll see you tomorrow. Bye bye, take care.